Hey there, welcome back to the channel. Today, we're tapping into some fresh, straight-talking financial wisdom from one of the most respected voices in personal finance, Dave Ramsey. Known for his no-nonsense approach, Ramsey has helped millions get their finances in shape, but his advice for 2024 and 2025 has some new twists and timely insights, especially if you're looking to invest smarter. Make sure to stick around until the end, where we'll share what Ramsey calls the most crucial move for 2025. Let's jump in. Stay with us to find out all the answers.
If you got some money you're sitting on right now, I would buy your mutual fund like tomorrow.
As 2024 draws to a close, Ramsey is reinforcing some core principles with a sense of urgency, especially regarding debt and cash reserves. He's recently emphasized that in uncertain times, like we've seen with fluctuating interest rates and inflation, having control over debt is critical. Ramsey advises people to cut down on any high-interest debt as a priority. In his words, debt is risk, and with rates still relatively high, it's only going to eat into your earnings and limit your investing options. He suggests that while preparing for 2025, your goal should be to enter the year with minimal debt and a robust emergency fund. This reserve will act as a safety net if things get unpredictable. For Ramsey, this isn't just about financial stability, but about maximizing your ability to seize future opportunities. Inflation is still a hot topic, and Ramsey isn't ignoring it. He acknowledges that inflation erodes buying power, which affects everything from groceries to investment returns. So, what's his strategy for countering this? According to recent comments, Ramsey suggests focusing on safe investments with solid historical performance. He's particularly bullish on investments that hold their value, like S&P 500 index funds, which he believes can weather economic storms better than speculative investments. Ramsey points out that the best protection against inflation is investing in things that have stood the test of time. He advises keeping investments in areas that are less prone to volatility and focusing on growth over the long haul. For example, solid, dividend-paying stocks or mutual funds that have shown resilience in bear markets are recommended by him for late 2024 and beyond. Dave's well-known debt snowball method remains a core part of his advice, but with a twist, he's now emphasizing what he calls the wealth snowball. This involves starting small with manageable investments and letting them grow over time, just like paying off debt in increments. Ramsey believes this is a good approach for anyone intimidated by the idea of jumping into investments. He suggests focusing on building a wealth snowball by contributing regularly, even if the amounts are small at first. With the compounding effect, these small, consistent contributions can grow significantly. He points out that this approach is particularly suited for 2025 when people should be thinking long-term and avoid trying to time the market, which he says is a risky move in any climate. Ramsey has always believed in the long-term stability of real estate, but he recently advised caution for those looking to enter the market in 2025. In one of his recent interviews, he discussed that with higher interest rates, buyers need to be strategic. His advice? Only buy property if it fits your budget and you have a strong financial foundation. He's noted that while real estate can be a great investment, it shouldn't come at the expense of your liquidity or retirement. For younger investors, he advises focusing on saving for a substantial down payment if buying a property. He remains supportive of real estate as a long-term investment, but warns against over-leveraging in a market that might face higher interest rate pressures. Dave Ramsey remains a huge advocate for retirement accounts like 401k, and Roth IRAs, and his advice here has a specific strategy for 2025. According to him, maximizing tax-advantaged accounts should be a top priority. With the possibility of tax changes on the horizon, he emphasizes the importance of taking advantage of these retirement accounts while the benefits remain. Ramsey encourages fully funding these accounts before moving on to more speculative investments. He states that a Roth IRA is one of the best vehicles for young investors as it grows tax-free and doesn't burden you with taxes on withdrawals in retirement. Ramsey has been vocal about his skepticism toward high-risk assets, especially cryptocurrencies and any get-rich-quick schemes. In his recent talks, he's addressed the dangers of speculative assets, saying, "If it sounds too good to be true, it probably is." He warns that while these investments may seem exciting, they don't align with his foundational philosophy of building wealth slowly and securely. For Ramsey, the focus in 2025 should be on stable, proven investments rather than the next big thing. He believes that avoiding the latest trend will lead to much better returns in the long run, and that the only shortcut to wealth is consistency and discipline. For those who are new to investing, Ramsey has some straightforward advice. Start with what you understand. He's a big proponent of simplicity, urging beginners to stick with mutual funds or ETFs that track the broader market, like the S&P 500. He often repeats that you don't have to understand every detail of investing to start. You just have to get moving. Ramsey's advice is that simplicity and consistency are the best approaches for new investors. His motto, "Start small, stay consistent, and keep learning." This is particularly relevant for 2025 as he predicts the market may remain volatile, making disciplined investing all the more valuable. And finally, the advice you've been waiting for, Ramsey's top recommendation for 2025. According to him, this is a year to focus on financial discipline and avoid overspending on unnecessary luxuries. He emphasizes that as the cost of living continues to rise, the best investment you can make is in your own financial stability. Ramsey's concluding advice? Invest in what you understand, stay consistent, and always have a plan. He believes that the habits you form in 2025 will set you up for success in the years to come. In his words, the road to wealth isn't paved with shortcuts, but with simple, smart, and steady choices. So, if you're ready to make 2025 a great financial year, start today and keep building those good habits.
That wraps up our look at Dave Ramsey's latest and greatest insights for ending 2024 strong and preparing for 2025. If you found his advice helpful and want to dive deeper into more strategies from the world's top investors, hit that subscribe button and join our community. Don't miss out on tips that could change your financial future.